All right, welcome to another episode from the Chart Readers. Hey, I do apologize for not making any videos over the last couple days. I'm going to do some quick ones here and then we'll get back into the normal full thoughts tomorrow onward, right? So let's take a look at the sector. I will look at most of them like I normally do, and I'm actually going to focus on two extra things. One was I saw this come in yesterday. I saw it this morning actually, but we'll talk about this article about Schumer, Booker, and the rest of them pushing for a promptly finalized reschedulization thing. I also really am going to focus on the Dow Jones. All right. So if you watched my last couple videos, I was saying that the Dow Jones was doing better, and look, it was, right. Let's take a look at SP 500. Been in a hard downtrend, right? Let's take a look at NASDAQ, CompQ, hard downtrend, right? Dow Jones was doing well. Dow Jones was actually going up, little fall, actually went back up. It's now kind of catching up to the others, right? And I think that is starting to worry me a little bit. And you can actually kind of see that exactly on the TLRY charts. Not as loud, but it comes down, it goes back up, and then is now kind of doing that little back down, right? I think the one thing that Tilray has that the other ones didn't was the earnings. All right, I think it's amazing that Tilray was able to stay up the last few days, and I think a lot of it really was because of the earnings. Sadly, it had to follow the indices. That's why I always stress, right? The indices are the ocean, and then these little stocks that we buy and sell, those are the little boats just floating on it, right? So I'll go over all this and more. I'll obviously look at the other tickers going down, but before we do go any further and I give you more of my thoughts and opinions, what are we gonna do? Same thing we always do, right? We'll take a look at the daily and the weekly to see how these things are setting up short term. We have our 5 moving averages. There are horizontal support and resistance lines that I do draw manually myself. And then when we are done up here, we'll use the MACD, RSI, and volume as our lower indicators. Hey, really quickly, if you can, please subscribe to this channel. Share this video online with your friends. Comment good or bad if you disagree. Look, anything you can do helps so much with these YouTube algorithms. But for real, just being here, giving me your time, oh, I can't thank you enough, all right? So real quick, let's talk about Tilray. I think I've talked about this the most over the last week, so I'll probably focus on the others the most, right? But hey, the earnings were good. Okay, I said that a few videos ago. I said that on my last video. I'm still saying that today. The earnings were good, okay? And this was the best market reaction, especially given what we saw in the last ones, right? Nasty, scary gap down. One more time. It wasn't even a gap down, but it was some big red drops, right? So this was the first gap up of the year, and I mean that really is saying something on Tilray's earnings. All right, what happened was it was good earnings in a bad moment. All right, and I think the simplest way to explain it is the Titanic. All right, I use boats. I'm not even a boat dude, but again, I'm a simple-minded guy, and I try to use simple things. Right, so the Titanic was arguably the best boat ever made at the time, right? The issue was there was just too many icebergs out there. And hey, an iceberg's gonna win. And that's what happened here. Tilray built a good boat with its earnings. The problem was starting with the S&P 500 was a very bad downtrend most of July, right? It was echoed by the NASDAQ doing the same. All right. And again, NASDAQ has absolutely nothing to do with this sector. 100%. I've said that so many times, right? But you need to look at the big three at least. All right. And as much as the Dow Jones was able to kind of stay away, right? Like literally since the middle of July, they were all going like this. This one at least had a little bit of a difference. We're still actually in that same downtrend. We just had a little bit of a recovery in it, right? So Dow Jones has caught up. I don't think that sounds grammatically correct, but it caught up. It did. And it caught down, I think is actually the right way of saying it, right? So Tilray, despite the good earnings, you are at the mercy of the ocean. You are at the mercy of the icebergs if you're the Titanic. It is what it is. Now look, I'm not like referencing the Titanic to mention like a crash or anything like that, right? Like it is nothing more than a metaphor, that's the word. But just I hope you get the point, right? And really what I'm looking for really is actually on the Dow Jones more than it is on the weed stocks themselves, right? But we have you can't we have two moving averages right here, the 50 and the 100, and they're both very, very strong, and they're both relatively close to each other. We cannot go below $39,000, right? You can see it's basically 39.2. I think I'm willing to say just 39,000 flat. That's just a little bit lower than the blue line, right? We can't lose that. That's actually probably half of this guy too, give or take. Yeah, I like that line. Um, if we lose that line, we're now actually going to be as bad or like worse than the other two, right? And that's what we can't afford. And I realize that this is a weed sector video, right? But again, this is way less about these actual tickers. It's way less about these four random letters and way more about the indices right now, all right? It would be very scary on Tilray specifically to lose 179, right? Losing 179 will start to put us under all the moving averages. The problem also is it's green, 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 green. It might be a red, 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 red all the way back down to this 160, all right? So hopefully we never lose that 180. Hopefully the Dow Jones never loses those two lines, and that will translate here, all right? But Tilray looking a little rough. CGC, this is what I think, like, this was a bad day on Thursday. This was a scary 10% drop, and now we see ourselves with the doji right on the last moving average. This is on the cusp of losing them all, right? And you never want that. That's a scary RSI right there too. It wasn't that long ago. It was actually about a month, it's 2 months ago, give or take. We had an RSI as low as 4. If you can go from 40 down to 4, that's a lot of pain to be at. That's maybe even a 450 number. And just look at that channel right there, right? It would be horrible if CGC lost 585, all right? Again, that's roughly the distance that the I keep zooming in and out, my apologies. That's roughly the distance that the Dow Jones was, right? So DJ30, hopefully these two lines don't go down. That's roughly these two lines on CGC, right? The purple one and my little line, right? So hopefully that's the lowest. If we lose that, that's actually more than a 20% drop, right? You're losing one of $5 that you have, and actually a little bit more than $1, right? So that right there would be my death line for sure. I am not liking the MACD and RSI. I'm actually not even talking about the MACD, RSI, and volume very much on this video or most of these videos because it's very, very indice dependent, all right? I think I saw that SNDL had earnings. Let me know if there were earnings or not, all right? I think regardless of earnings or not, this is following the exact same thing that I'm saying on all the other ones, right? If you're going to compound bad earnings on a bad market, that's scary. And I really can't tell if this doji is earnings or if that doji is the same CGC doji. All right. The one thing to say, and I didn't do it, earnings for CGC are next week. When is the 8th? I don't know. I don't know my calendar in front of me, but the 8th's in sometime next week, right? So Thursday, if I'm doing the math right in my head. Be careful with earnings, right? But let me know if SNDL had earnings. Nonetheless, that is a pivotal two lines right there. You can see it if you're looking in the box over there. The average 50 is at $2.08. The average 100 is at $2.07. If we lose both those lines, oh man, 175 might come quickly. That's a good little resistance right there at 190. I think my problem is this RSI. We have a long way down to go. We were at 16 not that long ago, and we're still at 40 right now, right? So 190 and 170-ish are kind of the next two lines down if this thing confirms the loss of, let's call it 204, 205. Yeah, 205 I think is the death line. Between 205 and $2 for SNDL. Let's take a look at high tide really quickly. Man, high tide. High tide is what I would call bad earnings plus bad market. All right. Again, there are a lot of people, and myself included, that actually said it was good earnings in this June 15th to 17th window. I forgot exactly when they dropped. It was somewhere in these 2 days, 14th to 17th. it doesn't matter if I think it was good earnings. It doesn't matter if you think it was good earnings. And I say that with love and respect, believe me, right? If you're long and strong, that's obviously said in a different light, right? But my simple human opinion of earnings does not matter as much as the market reaction. And the market reaction was bad. Instead of staying over the 8 and the 20 and just going, earnings brought us under both and under the 50. Once it lost the 50, it was game over. It really, really was. And man, the 100 couldn't save us. It's 200 couldn't save us. We're already down to our 170, right? And man, the RSI is real low. RSI already got so low that it hit 7 single digits, right? But the problem is Dow Jones, right? Like Dow Jones is still doing the downtrend, even though it looks like a little better because of that recovery right here. It's still that same downtrend, right? So high tide, I think this is far less about high tide specifically and more about just the market kind of taking over. You know what I mean? This one's sad to see. And again, I love the high tide people. You know I do, right? And I'm not here to be a fanboy, right? This one makes me sad, but this could get worse. All right. I know a 30 RSI looks bad. I got to draw some lines underneath. I feel bad doing that. That's our next line. I think 154 is our next line down. I unfortunately need to draw one more. I think it's this. And 140. I really think there's a decent shot that this comes as low as 140. Hopefully that 150 something can hold it. I don't know if 170 is going to be strong enough. Yeah, I do see a little bit of a post-market recovery. You know, I don't really care about post-market much, right? So that's a little rough. Goodness, dang. What else do I need to look at? I think I looked at most of them, right? I guess I'll look at MSOS real quick. MSOS. That's rough right there. I think with MSOS, I'll cover this because I realized I hadn't yet. So there was an article. Obviously, this is I don't want to call it a bias publication because that makes it sound really weak and bad, right? But I would want to see this level headline from something a little more neutral, right? Whether it's Fox, and even though that's kind of an extreme in its own way, whether it's CNN, and some people think that's an extreme in its own way, New York Post, Washington Post, whatever, right? I would want to see a non-sector loving article that says the same thing. All right. The other thing in my head, man, I've heard Schumer and Booker say this, that, and those, and this, that, and those, and every year they say this, that. I will believe it when I see it. All right. And hey, maybe this is the one that they actually can do it. I have no idea. Right. But man, we've heard them say so many things about so many things. Promptly finalize. We've been talking about finalizing reschedulization for a long, long time now, right? And I think I'm really at a just do it and stop talking about it kind of thing, right? So to me, that headline doesn't mean much. I think if it was a couple different publications, and I say different, like I want more than just one, right? But at least one more. That would do something. But right now, I mean, this is just echoing all the other thoughts, right? This is below the moving averages. RSI can still get worse. I know 30s looks low, but it can always get lower. TrueLeave, what do you look like, TrueLeave? TrueLeave was doing one of the best. That's a bad candle to lose those 4 moving averages. That's rough actually. CURLF. Oh, this one's already under all 5 and just heading on down. Green, nothing. Red. This might actually come down at 260 right here on CURLF. VRNOF. Oh man, this one's on the cusp of losing all 5. Green, nothing. Could be a red. This thing actually might come down to 340. Hopefully not any lower than 325. That would be pretty scary. And then Cresco, I think that's the last of the big 4. Most of them are under all five. Truly, even again, I said it right when I looked at it. This one's been doing the best. This one's been holding moving averages. This one's on the verge of coming down to the last one. Man, it's hard for MSOS to do anything other than be all under all five and heading down when four of the top five aren't looking good, right? This was a rough sector review. Hopefully the Dow Jones gets better and can help the sector, all right? Let me know your thoughts. Let me know your opinions, even if you disagree. Hey, thank you so much.